Hello, people, viewers of this channel that I like to refer to as bulls and bears. Today I'm going to show you how I got my credit score to 850. Now, I haven't checked my credit score in like a year, maybe 9 months to a year. And today I logged in and I was shocked that I've got 850 on a credit score, which I didn't know how high credit scores could go. And I'm going to show you what I think got me to this level. Now, I know many of you on this channel, many viewers, think that credit scores are irrelevant because it only helps you borrow money at a lower interest rate. And some people are against borrowing money, but having a good credit score can definitely benefit you a lot more than just borrowing money. Even car insurance rates in some states are partly determined by your credit score, so it's very important. Most people in the United States carry some sort of debt. And whether you're looking for a new loan, a mortgage, refinancing, even a debt consolidation loan, or getting a credit card balance transfer to pay off other high interest debt, all that is more easily done by having a better credit score. So today let's look at my credit score, and I'm going to tell you what the things that I've done that I think are affecting it. Take a look. Now today we're going to utilize the FICO Score tool put out by Citi, and it's okay if you can see my username here because my password is hidden. I'm going to go ahead and sign on here to my credit card account, my Citi card, and we'll give it a minute here to load. And as you can see, I've got a zero balance, and that's going to be partly what we're going to talk about today. Paying off your cards in full is one part of having a good credit score. But it's also important to have some open lines of credit. We're going to talk about that. But first, let's go to FICO Score right here. And I think this updates every 60 days, if I'm not mistaken. Let's go ahead and let it load here. There we go, 852, and that's as of November. I'm not sure if it's going to update in December. It might be every 60 days on this particular FICO Score tool put out by Citi. So 852, yeah, pretty high. It goes on a scale of 900 according to Citi right here. Now here are a few points I want to make and what I think helped me get to this type of credit score. One is if you're able to pay off your balances in full each month, do that. But it's also important to utilize credit. And I have about 8 credit cards right now. I have 8 credit cards and 2 store cards. Well, technically those are credit cards, so I guess you could say 10. But 8 standard credit cards and 2 other store credit cards. One is Kohl's and one is Target. I try to pay off everything in full each month. Thankfully, I've been able to do that now for several years. But the cards that I don't use that much, I make at least one transaction a year. Sometimes it's a big transaction, and then I'll just pay it off in full. That way the card is showed as being utilized, because if it's inactive, they could actually shut your account down, and that could be bad for your credit score. Also, if you have a low credit utilization, that could really help your credit score. So if you have 10,000 in available credit and are using 8,000 of it, that's about an 80% utilization. That's not very good. Even if you pay it off in full each month, it's good to have a lot of available credit. Now, credit scores are tricky. Here's an example. My dad has zero debt and doesn't use any credit cards. Everything he needs he pays for in cash, and he's got like a 710 credit score. Me, I have debt. I still have a mortgage, and so I have more debt than my father, but my credit score is just, as you saw, is 850 something. So it's pretty tricky the way they try to lower your credit score when you don't have debt. But if you utilize credit, if you pay your loans on time, then it's going to be more likely to boost your. Another thing, have multiple lines of credit open, even if you don't use it. Okay, so some people go out and just get a car loan, even though they could pay for the car in cash. Get a car loan at 1% or 2%. If you have a good credit score, you can get that type of low interest rate. Of course, it should go without saying, make all your payments on time. Do not have late payments. Even if you have a late payment, there's a letter you can write, and banks and lending institutions are not required to do this, but if you write them a letter saying, okay, the health crisis, what other event might have affected you, sometimes they will make that appear or change that from a negative to a neutral, or take that occurrence off of your record. That can also help. Also, we went and got a mattress, and we used this financing that was 0% interest, and we did that just because we didn't want to go ahead and just pay it all in cash and the cash would be gone. The more cash you could have on the side to invest is good. So we utilized the 6 months interest-free financing, and we paid it off, of course, before the 6 months, and that helped us keep more cash on the side, a little more money to invest, and then just pay it off in full before the 0% introductory offer expires. That's known as the buy now, pay later financing. Also, some people use that for medical costs and dentistry. Sometimes you can get like a loan and it's 0% interest for a certain period. The one we've used before for dental work is called Care Credit. So utilizing different types of loans and credit and paying them off in a timely manner is also going to help your credit. Even Bloomberg put out a recent article here, credit scores for car insurance. Regulators are taking aim. So it's a little bit of a debate whether or not credit scores can be used to help determine your car insurance rate. The way car insurance companies look at it is that people with better credit are more likely to be more responsible in general, and therefore more likely to be better drivers. And people with worse credit generally are less responsible and are more likely to be worse drivers and have more incidents and accidents. Right? Now that's not always the case, but companies, insurance companies have seen a correlation between better credit scores and those people being better drivers. So there you go. Pay off your cards in full each month. If you cannot, utilize balance transfers and introductory low percentage rate offers, including 0% rates for purchases and for balance transfers. If you have balances you can't pay in full off, look for a balance transfer. That will allow you to more easily pay off that balance when you have a 0% interest. And then once you're at that point where you have all your credit cards paid off, then your credit score continues to climb. And even if you have debt, like I've said, I have a mortgage, if you pay that on time, that shows a good payment history, and that's also going to help your credit score. So this might not be the exact magic number to get the best score, but I have 8 credit cards, 2 store cards. I utilize different types of credit, including buy now, pay later. If you have a low or 0% interest rate on a car, why not go ahead and finance it and just pay it off before the introductory rate expires? We use different types of credit, including medical and different types of loans that are available for different types of things. The key is paying them on time, paying them off before the high interest rate hits, and that's going to help your credit score. Of course, longevity, not being a 18-year-old also is a factor when you have 10 plus years of established good credit. That can also help. No bankruptcies, goes without saying. I hope this helps. Thank you for watching this today. Please like and subscribe and share this video if you know someone that needs help getting their credit score elevated. Thanks for being here. Bye now. Peace.